In this video, I'm going to be breaking down Polygon. I'm going to share with you what patterns I see on the chart, where I'm going to be buying in, and where I think this crypto can go price-wise. Spoiler alert, I am very bullish on this coin. So if you find this video helpful, I'd appreciate it if you hit the thumbs up button and subscribe for more content like this. All right, so on this chart, we have the weekly time frame. I'm also looking on a logarithmic scale. I like looking on a log scale, especially with crypto, because some of these moves just make the linear chart just really hard to see some of the patterns. And some of the patterns look way more proportional under the logarithmic scale. So as you can see, I've got a few lines drawn here, and this is a standard Elliott wave 5-wave structure. So let me show you what that looks like. They're also called motive waves, where we have 5 waves up, 1, 2, 3, 4, 5, where waves 1, 3, and 5 are all moves to the upside. And then we have wave 2 and wave 4, which are waves to the downside. When you put all of these together, we get one impulsive wave that creates a wave 1 of a higher degree. Typically following that, we'll have a B, C corrective wave. This is another pullback of a broken down 3-wave structure. So I'm an Elliott wave trader. I like the way that Elliott wave patterns show up on the chart, just the way that my mind works. I'm able to recognize those a little bit better and trade based off of that. So let's look at Polygon, look at MATIC right now, and you can see how this is playing out. So we have a wave 1 to the upside. This was basically at the middle of 2019. It came down during March of 2020. We all know what happened in the world around that time. Then we went on this crazy run during the last bull cycle, crazy run up, and we put in a wave 3. Then over the last year plus, we've had this sad downturn, this bear market for MATIC. I mean, if you look at some of the price moves from the bottom of this move at 2020, I mean, we were at fractions of a penny, and we went all the way up to $2, almost $3. So, I mean, just a crazy multiple return. And then from there at the top all the way to the bottom, we hit a 90% move down. It lost 90% of its value over this bear market. And so at the time, I even remember a couple years ago, a lot of people were talking about Polygon and how it was a new up and coming platform. It could dethrone Cardano and this and that. And I'm not someone who talks too much about the fundamentals as much as I do technical analysis in these types of videos. But I don't believe that this coin or this project is done, is finished. And so the technical analysis that I'm about to go through definitely supports that. So we have the 4 waves of the 5-wave structure. And so now let's talk about how and why I believe now we're going to be headed into wave 5. Of course, reminding you what this looks like: wave 1, 2, 3, 4, and 5. And the angles and the proportions don't necessarily have to be exactly like this. So on a chart, on a real chart, it doesn't look exactly like that. But there are some rules that apply to Elliott wave to make sure that these 5-wave structures are valid. And one of those being that wave 4 cannot cross over into the price territory of wave 1. And so we are well above that. It also states that wave 3 cannot be the shortest wave. And so we already have wave 1, and wave 3 is a lot longer than that. Also, the wave 3 is usually broken down into another 5-wave structure. And so I just want to count that out for you as well. And so we had wave 1, 2 of the higher degree, but then as we started wave 3, we have another 1, 2, large extended wave 3, 4, small pullback, and then wave 5 that completed wave 3 of the higher degree. And so you can see how that pattern plays out and how these different patterns are sometimes inside of themselves. So in a wave 3, we have another 5-wave structure. Well, this whole entire thing is also a 5-wave structure. One of the patterns, or actually one of the rules or behaviors of this wave 4 is that when you bring out the Fibonacci retracement tool, wave 4 typically comes back to the 0.382 level. Sometimes it goes to the 0.5 level, but let me show you where price is coming back to. So we have wave 1, and then right here is the start of wave 3. And so for a Fibonacci retracement tool, we'll start at the bottom and bring it all the way to the top of wave 3. Now let's take a look at where this wave 4 is coming back to. It is coming literally right to that 0.382 level. Guys, girls, this is textbook. And so it gets me really excited to see this. And while that doesn't necessarily mean for sure this is a wave 4 and we're going to turn around, but by looking and understanding these rules, you can make better investment decisions. It increases the probability. And that's essentially how I view trading is. I don't necessarily know exactly what's going to happen. Basically, nobody does, but you can form your thesis, your hypothesis based on probabilities and how you are viewing the charts, and you can use these different rules to confirm it. So looking at this, we have price coming up, the Fibonacci retracement tool coming back to this 0.382 level. That is a very potent level, especially for wave 4. Now let's zoom in a little bit here. When we touch this level right here, this 0.382 level, we also get a bullish engulfing candle. And if you've been watching some of my videos, you know that a lot of these cryptos lately have been putting in this weekly bullish engulfing candle. And that is another confirmation of a potential reversal. And basically what this bullish engulfing candle is this green candle totally engulfs the previous. Typically it's a red candle. And in this case, it actually engulfs multiple candles. It looks like 1, 2, 3, basically about 4, almost 5 candles to the downside. And when you see that, it doesn't necessarily mean, oh, automatically we're going to go up. But if you see that and it's at a potent level of support, then it gives us a higher probability. And again, we're looking to stack all of these different signs and indicators so that we can form a hypothesis of where we think price is going. And so let's zoom out a little bit even. And so let me bring your attention back to this Elliott wave 5-wave structure and the corrective phase of the structure. So A, B, and C. So this is broken down into a 3-wave structure, which is the pullback. And let me show you on the chart here. So even in a wave 4, we have this, this wave 4, but a lot of times, most times, it's broken up into another 3-wave structure. It's subdivided, as they say, as another 3-wave structure, usually in the form of an A, B, and C. And so I actually see that here on the chart. So we start at the top of wave 3. We would come down for wave A, go across for wave B, and then back down for wave C. That completes wave 4. And even inside of wave B, we have another 3-wave structure. And I won't go into it in this video, but some people will label this as a WXY pattern. And so that wave B is also subdivided into 3 waves. And so when you see all of this and you understand the different ways that wave patterns can show up and how they're subdivided, again, it just increases our probability. So Now let's talk about the exciting part of where we think price can go. So right now we're sitting at 43 cents. So under 50 cents, and we're sitting at that 0.38 retracement level as support. And what I have found when using Elliott wave, looking to project where wave 5 can go, I like to use the Fibonacci retracement tool, but I use it as an extension tool. So typically you would go from the bottom, up to the top. But for this, I've seen where it works out well to go from the top down to the bottom of wave 4. The top of wave 4 down to the bottom of wave 4. And this 1.236 level is one that is potent. Also in the crypto space, I have seen where this 1.618 level is also a potent level. Again, there's no guarantee that any of these levels are magically going to see price hit them. I mean, they could hit something lower or not even go anywhere near it, or it can completely blast through it. We just don't know. Again, this is a game about probabilities and making your thesis compared to past data and just continuing to analyze and see how things change. And so I right now would say that we would at least hit the 1.236 level, which would be right around $5. And so we're at less than 50 cents. We're at 43 cents, 44 cents. If we saw a move up there, we're talking at least an 11x from where we are right now. That is crazy. That's wild. And if we see the 1.618 level, that gets us to almost $12. So now we're looking at over 25x from where we are right now at 40 cents. Again, do I know for certain that price is going to go there? I don't. But I will tell you right now to do your own research, do your own analysis, because this is not financial advice. I'm just a guy on the internet, but hopefully you can learn from me. And I just want to share what I'm looking at. And so hopefully you'll find value in that. So am I buying? Of course. I am definitely buying into this. This is probably one of the best setups that I see right now in crypto from a technical analysis perspective when it comes to Elliott wave. I've spent the last week or so analyzing dozens and dozens of coins, and this one seems to have a lot of things stacked in its favor, from the 5-wave Elliott wave to coming down to the 0.38 level, to this bullish engulfing candle, to the ABC correction that we see, and even we have bullish divergence here. This will be the last thing I show you when it comes to technical analysis, but here we have this bullish divergence. And so bullish divergence is when we have price making a lower low. So we have a low here. This was in June of 2022. And then we have a lower low, so lower than this one, a lower low just this year in October. So lower low, price is making a lower low. Just to repeat it again. And then while that is happening, at those same points, we have the RSI, the relative strength indicator indicator, making a higher low. And so we have a little bit of a bullish divergence here. That means the momentum is shifting. It's shifting from the downside to the upside. And sometimes it takes a little bit for this to develop. It doesn't mean that as soon as this pops up on the chart that we're going to see price go in a different direction, but it's just indicating that the momentum overall is shifting from bearish to bullish. And so we still have to continue to wait for price to show us that. But this is another good indicator that can give us a good clue as to what potentially could be happening in the future. And so with that and this bullish engulfing candle, I'm going to start dollar cost averaging into Polygon. I will continue to dollar cost average until I see some indication where maybe this becomes invalid or it starts to go in the bearish direction. And as far as taking profits, I will not be looking to sell until we get to that $5 level. Again, if everything continues to play out like we are intending, and I'll probably start taking profits around there, but then maybe not even until it hits over $10 or $12 that I'll look to take, everything out. So that is my analysis of Polygon. If you found this video helpful, I'd appreciate it if you hit the thumbs up button, subscribe for more content like this, and I will see you in the next video.